Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 303 on 9th of November. We're going to talk about the asset class that you must allocate to, and that is gold. And gold has been going up the last few days, and we'll look at some very important features of this asset class that a lot of portfolios are still missing out on. But first, a look at the markets. So PSU banks once again taking the lead, up 3.9%. For the week gone by, they are up 12.5%, and for the month 27%, and for the last 3 months 36% gain in just this segment. So you can see how one segment can really push through while others are not doing so well on a day-to-day basis. But when the momentum is there in particular segment, nothing can stop it really. So FMCG, Bank Nifty also up 0.2 and 0.3%, but all other sectors took some profit booking. I wouldn't say they are falling because over the past week or past month they're still doing quite well. But real estate, pharma, public sector enterprise, metals, autos, all giving up almost a percentage of gain today. In terms of broader indices, you can see Nifty Next 50 down 0.2%, Nifty 50 itself down 0.25%. Nifty CNX 200, CNX 500 also down 0.3%. Small caps and mid caps also down 0.4 and 0.5%. In terms of weekend investing, small cases, a few small cases managed some small green ticks, but other than that, most of the other small cases were in line with the market, between 0.5% to 1% at the worst and 0.25% at the best. Not a very remarkable day on either side, but I think after a significant jump in the last month or so, there is some sort of tepidness before we move to new highs. So Nifty is very, very close, within striking distance of all-time highs. We can achieve all-time highs on any day now. I mean, a couple of percentage gain in the market and we'll be at the all-time high. The broader markets in terms of the small caps, mid caps are still a bit away from new all-time highs. So there has been a sort of a Nifty leading charge towards the all-time highs, and within Nifty, public sector banks have done the best in the last few weeks and months. Overall, you can see the heat map for the day, flat, Reliance, HDFC, State Bank, HDFC Bank, Infosys, Wipro, Adani Enterprise, Bharti not doing so well. In the green, Coal India 2.5%, ITC 2%, Adani Ports doing 4.4%, and there's not much green besides that, but a lot of red ticks. So ICICI Bank, Bajaj Twins, SBI Life, TCS, Hindalco, Grasim, Ultrasemco, Titan, Maruti, Sun Pharma, Hindustan Levers, Nestle, Power Grid down 4%, that's a big one. L&T, NTPC, Asian Paints, BPCL all losing just a very on a nominal basis, but mostly the gainers coming from ITC and Coal India, and the losers coming from Power Grid, Hindalco, and possibly Tech Mahindra. Top gainers, PI Industries up 10%. So there are some small and mid caps which are doing fantastic. Union Bank fantastic, plus 9.4%. Bank of India fantastic, plus 9%. PNB plus 7.5%, Polymedicure plus 7%. So extremely good gains on some of these, and these have come post results. So post result gains usually are extremely high probability moves that will sustain. So the market has digested the result, the market has given its verdict that the stock needs to be re-rated. That's why there is a move after the stocks, and if there's a move down after the result, then it is pretty much a weak sort of a move for some time to come at least. So Privy Special down 8.5%, Lal Path Labs down 8.5%, MRF down 8.5%, Jubilant Foods down 7.5%, and Godrej Properties also down 7%. So real estate stocks also getting some hit. So gold, as you all know, should be an asset allocation in your portfolios. An extent of asset allocation, of course, depends on your faith and your financial advisor's confidence in providing you with the ultimate hedge and insurance, as I call it. So the gold component is not just a investment vehicle, it is a hedge against any asset that you hold in your own currency. So if you're holding real estate, if you're holding stocks, if you're holding cash, if you're holding anything in INR, gold is that insurance against your own currency. So if INR has gone from 10 rupees in 1991 to 83 now, gold has protected you against that fall by matching with the inflation, and you're actually doing better than inflation. So your government goes kaput. You've seen Venezuela, you've seen Sri Lanka, you've seen Turkey, so many other countries, even Japan. I mean, the bank has the Japanese currency has gone from 110 yen per dollar to 150. And just look at the gold price in yen terms. Just look at the gold price in euro terms. So people who have allocated in non-USD dominant places, if they've allocated to gold, they have protected against the loss in their own local currencies. And that is the biggest hedge and insurance that you can buy as a global asset which is priced in dollars. And the good part is that our countrymen and countrywomen especially have been extremely intelligent. They have amassed 25,000 tons of gold. You can see here the World Gold Council has estimated that Indian households have 25,000 tons. The government only has 600 odd tons, but the households have 25,000 tons. And they have been making 11.6 odd percent returns for the last 50 years. So a lot of it may be unaccounted also, and a lot of it may be accounted as well. But 11.6% returns is amazing for the low risk it carries. In INR terms, maybe gold has maximum taken a drawdown of 25 to 30% in the worst case scenario. But it's been a great hedge against equity persistently, and I'll show you that. So just compare what Indian households have, 25,000 tons, versus all these central banks put together. So USA has 8,000 tons, Germany 3,000 odd, Italy, France, Russia, China, they say has 10,000, but they have declared only 1948. Swiss has 1,000 tons. Japan, Netherlands, so on and so forth. So all these put together are still much lower than what we have as households. Of course, Chinese households also have a lot of gold, and it's an Asian phenomena that we don't have social security, and we want to protect ourselves by our own means, and hence we invest and have such hedges where we are not dependent on the government, or we are not dependent on external sources to protect us when the what hits the fan. So and that does from time to time, every decade, every couple of decades. So you also must be curious. You should be curious why central banks continue to increase their gold allocations. Why do they hold it in the first place? Why should central banks hold gold? Why don't they hold crude? Why don't they hold aluminium? Why don't they hold silver? Because gold is that asset class which can be revalued in the central bank reserves to prop up the entire balance sheet. And this has been done several times in the past century at various times. So central banks hold gold for a reason. Please understand that reason. And if central banks can hold gold for that reason, you should too. There's no reason why the currency that we hold, which is issued by the central bank, they are worried about something and they are holding on to something else. Why should we not be holding on to that something else also? So you can see that central banks have been continuously sort of increasing their gold holdings. This chart does not show the recent hikes, but this last quarter, another 400 tons has been souped up by central banks. Of course, USA holds the most gold. So despite them printing enormous amounts of dollars, other countries are probably printing an equivalent amount of currency in their own terms. So dollar may be a dirty shirt, but it is not the dirtiest shirt out there. It is probably the cleanest of the dirtiest shirts. So hence, it remains strong versus other currencies, but everybody is holding on to gold. So there is no reason why you shouldn't. This is the RBI, the Reserve Bank of India's holding. So they had 300 tons in 2004, then they enhanced it to 550 tons, and now every year they are going up. They are very near to 770 or 800 tons now. And RBI has gradually also not repatriated most of the gold it holds. So it holds more than 57% of its golds overseas, which is very, very surprising given that any sanctions, if they are put on any country, this is the first thing that will be confiscated. So I have been vocal about wanting the government to pull back its gold from external shores, but of course nobody is listening to me. Spectacular long-term performance. So 20-year gold in INR chart, most people have made 10x sort of returns on gold. So classically, don't compare gold returns with other asset class returns. It is not supposed to be competing with other asset classes. It is an insurance and a hedge. But even if you were to see its performance, it would beat a lot of asset classes. So you can see here 11% plus CAGR for 20 odd years. It will go flat for some time, then it will make a huge run, then it will go flat, then it will make a huge run. That's how it has been going. There is no sort of down, lower lows and lower highs kind of a movement. And Indians are extremely smart. They have been deploying 800,000 tons every year into this asset class. And even if we were to compare gold with Nifty, because we can't really stop comparing things, this is about 22 years of data. And you can see at least from this point, 2000, where Nifty was also flattish and gold was also flattish for some time. Both have given similar sort of returns, 10x on either of them. And the interesting part is that when Nifty was going up in 2000, when Nifty was going down after 2008 crash, you can see gold was going up. So it very well balanced each other. Gold was able to give that kind of a support to your portfolio when your equities were crashing. Once again, when COVID was crashing, you can see gold was going up sharply. So it will always protect whenever there is calamity in the equity market. And when gold was sort of flattish, then Nifty was going up. So they play a very complementary role on a longer term basis, where if one asset class is not doing well, the other is doing well, and hence your overall portfolio becomes extremely robust, well balanced, lower drawdowns, and very good returns overall from that perspective. And I tweeted this very recently that I'm very, very clear in my mind, at least I feel it rightly, that we are going to stay in a high inflation environment for some time to come. Maybe the entire decade will go like this. So we must invest in real estate, we must invest in gold. These are the real assets which do very, very well in inflationary times. Of course, stocks will also do well. I'm not saying it is not always binary, that this or that. So what I'm proposing is that you must have allocation to these assets. Yes, you can have allocation to equities also. And because India is touted to remain one of the fastest growing markets, so equity will also do very well. But given that the environment is so toxic and we have headwinds of inflation from the rest of the world, we must remain in some sort of protection mode also. Can't go all out on equity on a 100% exposure basis. So make a good combo and you will not go wrong on this. This is our standard disclaimer. These videos are for mostly educational purpose and to disseminate daily data points, not an advice, not recommendations. Please consult your financial advisor on the same, and thank you so much for your time. Please do share this video with your friends and family and those who you care about. Maybe this will ring a new bell in their ears and they will be able to start on their financial independence journey as well. Bye.